Welcome back to Explain the Charts, where we provide the most detailed look into market movements and news. Today is Monday, March 16th, 2026, and we are focusing on the AUDUSD pair, which has been caught in a storm of geopolitical and economic headlines. Before we look at the candles, let's understand the fundamental backdrop driving this price action. Currently, the market is grappling with what analysts are calling the Hormuz Panic. Escalating tensions in the Middle East involving Iran and Israel have triggered a flight to safety, significantly bolstering the US dollar. Concerns over oil shipment disruptions are fueling inflation fears globally, which in turn supports US Treasury yields. On the flip side, the Australian dollar is seeking support from domestic factors. Tomorrow, March 17th, the Reserve Bank of Australia is widely expected to deliver a 25 basis point rate hike. This hawkish stance by the RBA is creating a classic divergence against the safe haven demand for the greenback. Strong U.S. economic data, including low jobless claims and high housing starts, has further complicated the bearish case for the AUD. Traders are now caught between a hawkish central bank in Australia and a global risk-off sentiment favoring the USD. Now, let's transition to the daily chart to see how these events have manifested in price. Looking at the daily time frame, we can see the full scope of the recent rally and the sharp reversal that followed. On March 11th, AUDUSD hit a multi-year high of 0.7187, a level that has now become our primary major resistance. However, as the geopolitical news intensified, the pair suffered a significant rejection at those highs. The candle on March 12th shows a sharp drop of 0.74%, closing at 0.7076 as risk aversion took hold. The selling pressure continued into March 13th, with a massive 1.37% decline that saw price touch a low of 0.6977. This level, near 0.6970, is a critical support zone that bulls must defend to prevent a long-term trend breakdown. The most recent candle on March 15th shows a slight recovery to 0.7004, suggesting some consolidation before the RBA meeting. We can see a clear correlation here. The peak on March 11th coincided with peak RBA hike bets, while the subsequent crash aligns perfectly with the Hormuz Panic headlines. The daily trend was bullish leading up to March, but this sharp reversal has put the medium-term outlook in jeopardy. For a bullish reversal, we need to see price reclaim the 0.7070 level on a daily closing basis. Until that happens, the path of least resistance appears to be a test of the lower support bounds. To get a more granular view of the breakdown, we are zooming into the 15-minute chart during the peak volatility period of March 11th to March 13th. Observe the price action on March 11th around the 0.7180 area, where distribution was clearly occurring. Despite multiple attempts to break higher, sellers met every push with significant volume, forming a double-top structure. As we moved into March 12th, the liquidity hunt, mentioned in recent news, became evident through sharp, erratic spikes. The failure to hold above 0.7150 was the first major warning sign for long positions. When the news of U.S. economic strength hit alongside Gulf tensions, the floor fell out from under the pair. Notice the series of lower highs and lower lows characterizing the descent from 0.7120 down towards 0.7000. There was a brief attempt at stabilization around 0.7130, but it ultimately failed as safe haven demand for USD accelerated. By the end of March 12th, the pair was trading near 0.7070, which acted as a temporary support before giving way. The intraday volatility highlights how quickly sentiment shifted from RBA optimism to geopolitical fear. This timeframe shows that 0.7040 to 0.7050 is now a minor resistance zone that must be monitored during the London session today. Returning to the daily view, we need to discuss the specific reasons to be bullish or bearish from here. The primary bullish catalyst is tomorrow's RBA rate decision. A hawkish 25 basis point hike could catapult price back towards 0.7100. If the RBA signals even more hikes are coming in May, the AUD could decouple from the broader risk-off sentiment. Additionally, if equity markets remain resilient, as ING suggests, the pair could target the 0.7200 area again. Conversely, the bearish case is driven by the potential for an actual military escalation in the Middle East. Any disruption in the Strait of Hormuz would likely send the US dollar significantly higher, crushing the Aussie dollar. Technically, a daily close below 0.6970 would open the door for a move toward the 0.6850 level. Short-term traders should look for entries near 0.7040 with stops above the recent swing high. Long-term investors may see the 0.6970 support as a value area, provided the RBA remains committed to its hiking cycle. Always watch the U.S. Treasury yields. If they continue to climb, the pressure on AUDUSD will remain immense. The key price levels to remember are 0.7185 for resistance and 0.6970 for support. Let's recap the important price levels and our unbiased predictions for the week ahead. Resistance is firmly set at 0.7185, while 0.7070 now acts as a secondary hurdle for any recovery. Support is anchored at 0.6970, with a major psychological level below that at 0.6900. In our first scenario, which we find 40% likely, the pair consolidates between 0.6980 and 0.7050, awaiting the RBA decision. In our second scenario, a 30% likelihood, the RBA delivers a hawkish surprise, driving price back to 0.7120. In our third scenario, also 30% likely, geopolitical news worsens, forcing a breakdown below 0.6970 toward the 0.6800 handle. The condition for the bullish move is a clear break of 0.7070 with high volume. The condition for the bearish move is a failure to reclaim 0.7040, followed by a breach of the March 13th low. Keep a very close eye on the news out of the Gulf and the RBA announcement at 4:30 Universal Time Coordinated tomorrow. Market sentiment is incredibly fragile right now, so tight risk management is absolutely essential. Thank you for watching Explain the Charts, and we hope this analysis helps you navigate the coming sessions. Please note that this is not financial advice. Always do your own research before making investment decisions.